Hi everyone, welcome to the Buffett and Beyond Research Saturday Market Recap, and this is for October 26, 2024. And let's take a look at what's going on with the market this week. Well, the market is measured by both the Dow and the S&P 500, backed off their highs, but have not broken support to the downside, sitting around that 20-day moving average, which we're going to see in a second. And the Nasdaq 100 briefly reached new recent highs, but backed off toward the end of the day with the rest of the market. And we're beginning to see some intermediate term indicators starting to turn over. So we're a little worried, but then all of a sudden this morning we got word that there was an attack by Israel on Iran, and maybe somebody heard something yesterday toward the end of the market close. But anyway, we'll see over the weekend. And the weekly stock analysis video, Axon Enterprise is in the right place, up 700% in 5 years and up 100% this year alone. Now, it was formerly known as Taser International, and you all recognize that. And they develop and manufacture electric non-lethal weapons for law enforcement and for personal defense. And folks, it's the personal defense that is starting to pick up steam, because people don't want to carry guns around. You shoot somebody, you're going to go to jail one way or the other. But for personal defense, a non-lethal weapon, that's where the people are starting to go to, especially in the big cities. And our ETF video, well, this week we show you how the best stocks and the best ETFs are almost doubling the S&P 500. And we can also hedge these portfolios. So this is very, very interesting. All right, let's look at the S&P 500. And these red bands, the top and the bottom band, are called Bollinger Bands by John Bollinger, who came up with this 40 years ago or so. What it tells us is that the market will stay within these bands over 95% of the time. And the center line is the 20-day moving average. And we talk a lot about the reversion to the mean. And you can see how the market tends to be drawn toward that 20-day moving average. It'll go up, made a nice high in here above that band, which means it will back off and then try again to touch that high, which it did exactly as we thought it would. And then it came back down and it is sitting on this 20-day moving average. And folks, you can see if we draw this line across that it is holding these highs that it set back in here. However, it has to break through these highs to give us any kind of bullish signals. But down here, we can see this intermediate term indicator, which is the MACD, starting to turn down. The blue line is turning down over the red line, not necessarily a good sign. So we might see some downside action this coming week, even though this coming week is the end of the month, and usually we see a pit bull low during that week, and then it starts rising toward the end of the week as money starts coming in from the IRAs and the 401ks and has to be put to work in the first 2 days of the following month. So we're coming into a pit bull low this coming week, so we expect a little downside action, and then generally rising toward the end of the week and the beginning of November. And gee, somewhere around November 5th, we're all going to go out there and vote, and that's what has the market on edge right here. And let us look at the S&P 500, but the candlesticks, and we can see this 20-day moving average. We can see how the market moved up there and came back down. And the whole thing is, let's zoom in on this. The whole thing was yesterday, this market was up nicely. I mean, it was up as high as 60 points at the high of the day, and then came back down and fell almost to the bottom of this travel in here. All day long it was weakening. And what happens on Friday when the market is down, it's that people are a little unsure of what's going to happen over the weekend, and then we wake up this morning and we find out about the troubles in the Middle East. So maybe that's what's going on here, but it broke about a 6-week winning streak where the Fridays were closing up, and that means that's bullish, of course, for the market, because people say, I don't mind being long, and I'm talking about the traders. I'm not worried about being long over the weekend. Well, this weekend they were. worried about what was going to happen. But we're still above this 20-day moving average. However, down here we go. We got this almost triple top in this indicator here. But the problem is the top in this indicator slightly lower than over here. But yet, if you go up here, the market is higher than it was back here. That's not a good sign technically. So we'll just have to wait and see what happens. Meanwhile, we'll look at the QQQs, and this is the NASDAQ 100, and we can see it tried to break through this previous high in here. Now, this is not an all-time high. The all-time high is back here. Tried to break through this high, couldn't do it, and came down and fell toward the bottom of that travel of yesterday. The market did gap up, so we have a gap in here which we don't quite like. And down here, yeah, we're getting that same signal as on the S&P 500. Not as strong, but still not good. It's starting to travel down, and we don't care for that. We're in an overbought condition in the intermediate term in here. So let's look at the Dow, and this is what's bothering us. We have the Dow breaking through the 20-day moving average, turning that 20-day moving average down around, and it looks like we want to head for this 50-day moving average in here. And you can see that this is a big break in the intermediate term indicator to the downside. So we do expect some downside action this coming week, probably Monday or Tuesday, and it looks like the Dow wants to test that 50-day moving average in there, which means the other indices will probably break through below their 20-day moving average. But technically speaking, we don't care for what we see because the market is worried about the election. In other words, if one person gets in and raises taxes, that's not good for the market, but the other person gets in and they talk about raising tariffs on imported goods, which means those countries are going to raise tariffs on our exported goods that are flowing into their countries. So the market is saying, are we in a win-win situation? No, we don't think so. And with the amount of debt that this country has, we're going to have to pay that piper sooner or later and start tightening our belts in here as far as government spending goes. But, you know, Congress, they like to spend tomorrow's money. And for portfolio protection, those of you who want protection about 12 to 15% below the present level of the market, this is about $135,000, $140,000 portfolio, and we buy 3 SPY puts. Now, the SPYs are about 1/10 of the S&P 500. Not about 1/10. They are 1/10 of the S&P 500. And you can see how as we roll over these puts, so we need about 3 puts for the disaster, we call it disaster insurance protection, about 12% below the market. And we need 3 puts, we need 3 SPY puts for that. And what we do is as one expires, like last week, the August put expired, and so we bought when that expired, or as it was expiring, we went out and bought the January put. So we keep rolling these puts over so we don't get caught with puts all expiring on the same day, because what happens when the market does go down, then it usually is not a drastic fall. It falls a little by little by little, and it could take months for the topping action. And that's why we go out with different puts in a portfolio this size or larger. And where do we get the money to buy these puts? We usually sell some covered calls during the week or during the month, just enough to get enough money to pay for these, because we are still in a bull market. We still have an upward trend, and therefore these puts are not that expensive. But what I've noticed as we bought these various puts in previous months, they're getting a little bit more expensive than they were during the summer and the beginning of the summer. So that might mean that, well, it does mean that people are worrying about the market a little bit more than they were in the beginning of the summer. So, folks, let's see what the portfolios are doing up to date. The S&P 500 up 22.9% as of toward the close of the market, not at the close, because we get these midday or in the afternoon on Friday. But our top QQQ portfolio, in other words, the top 12 stocks in the NASDAQ 100, which are the QQQs, that's the symbol for the NASDAQ 100, up 39%. And you'll see that in the ETF report. So the top stocks are up, the 12 stocks are up 39%. Our sector stars, we take various ETFs and we take the best ETFs that have performed the best over the past 5 years or so, and we pick the best stocks from those best ETFs, and we call them the sector stars of ETFs, and we form that portfolio. It has about 18 stocks in it, up 34.9%. And our growth portfolio of 30 stocks, buy and hold, change once a year, rebalance, and you hold it for the rest of the year and go to the beach, up 28.5%. So all of these portfolios that we have are outperforming the S&P 500 index. And remember, folks, the 2002 Morningstar report says that over any 10-year period, 96%, that's a full 96% of professional portfolio managers that manage the publicly traded mutual funds, 96% cannot, that's a cannot, outperform the S&P 500 over any 10-year rolling period. So to outperform the S&P 500 is the holy grail of investing. And as usual, don't forget, we have a 22-year track record with this growth portfolio, and we have been outperforming 2.5 to 1 over 22 years the S&P 500. So we're outperforming by 2.5 to 1 the S&P 500 over 22 years. So this is not a flash in the pan or having a good year. These portfolios are rocking and rolling all the time, folks. And the thing is that, of course, as you get higher returns, you expect higher risk. And that's why we hedge these portfolios for those of you who want to hedge. You follow our hedging strategy, and at least you'll hedge some of your portfolio. And then we also have the disaster insurance that we talked about just a few minutes ago. So, folks, we had a week that really the market went up, the market went down. The market is undecided, has been for the past month or so, and that's because the election is coming up and everybody out there is trying to figure out which stocks will do better under which administration. And the key is that the market is going no place, and we hear about new highs all the time, and they're just slightly new highs, just by a few points each time. But folks, the market is, or market participants are worried about this market. But it's the weekend. You go out, you clear your head, go for a walk on this beach, walk on the golf course, go out and exercise a little bit. Be with your loved ones, have Sunday dinner with your loved ones, and folks, you all stay safe, and we'll see you back here in a couple of days. And remember, folks, if you want to live on this beach like Jimmy Buffett once did, you've got to learn how to invest even better than Warren Buffett does now.